Costco, with its big warehouses selling cheap groceries and hot dogs, currently trades like a tech stock. We want to understand, is this genius pricing or investors selling themselves a lie? And once you know where the profit actually comes from, you'll see this company very differently. So this is a company first, price last breakdown. No hype, no price charts or price targets, just business physics, moat and durability, and the things that make us want to either buy it or walk away. So there are a couple of questions we want to be able to answer about Costco as a business, right? Is Costco actually impossible to overpay for? Or is that a dangerous lie investors are telling themselves? Number two, how does a low margin warehouse chain fund massive special dividends and still grow? Three, can Costco keep raising membership fees and adding executive perks without breaking that golden member trust they have? And number four, what actually stops Costco from just doubling again from here? More stores, more members, more cash? And if you like the idea of analyzing stocks with an owner mindset, with company first, price last, give this video a like so I know to make more of them. What is Costco? Well, Costco is a membership-only warehouse club. You pay an annual fee to get into big, no-frills stores, and in return, you get a small, curated range of bulk products at very low markups. Think of it as a subscription service sitting on top of a traditional grocery store. The result is that Costco has over 900 stores internationally, most of them concentrated in the US and Canada. There are 81 million paid memberships and a staggering 145 million cardholders. And best of all, these members have incredible renewal rates, with the US and Canada seeing around 92% renewal and the rest of the world at around 90%. So who are these members? Well, there's two primary categories. There are normal, regular households. These are the families and individuals who do their monthly grocery haul at Costco. And then there are small retail businesses that get their inventory from Costco and sell it in their own outlets. So why do they pay for that Costco membership? Well, it's to get access to lower priced goods. So it's a very simple business. Sell value to the members so aggressively that they feel it's worth paying a subscription just to enter the warehouse doors. So let's have a look at how $1 actually gets earned by Costco and how that flows through the business to become actual owner cash. So step one, the total revenue that Costco generates does come from the goods sold at its warehouses, right? That is what's driving revenue. There is a cost to deliver, with most of that revenue going straight back out to the suppliers. Costco keeps a thin slice as gross profit, but it wants to be the cheapest warehouse in town. Out of that thin slice, they pay for employees, rent, electricity, logistics, and the basic overhead of running the 900 warehouses they have internationally. Now we add the second revenue stream on top, those membership fees. And here's what's interesting. The membership fees, while they're a small part of overall revenue, actually provide the greatest margin and overall profit to the business. What is the Costco moat? We want to know what protects this company from being copied. It actually hits a number of key moat areas, right? One, they've got cost advantage and scale, right? Limited products that they offer, so a reduced inventory offering, keeping it nice and lean and simple. Only the high selling items are sold. Secondly, they benefit from switching costs and habit formation of the members, right? Once you change your weekly shopping routine to Costco runs, it's a pain to stop, especially when you've prepaid for that membership. Thirdly, Costco is a recognized brand and is trusted by its members. They trust Costco. They trust the quality, they trust the prices, and the returns policy. Kirkland is their private label. It's almost its own brand at this point. Finally, they have a significant distribution footprint. Hundreds of gigantic stores in prime catchment areas. That's something you can't replicate quickly. But if we had to pick just one as the real moat underneath all of that, that would be the membership trust. If members believe deep down that Costco treats them fairly and saves them money, the whole thing flies. If that belief cracks, the model suddenly looks a lot more like a normal retailer with low margins and big fixed costs. That is a very different business, because it's not as robust as many people are led to believe, okay? This moat dies if Costco pushes too hard on membership fees and perks. If they start hiking those membership fees too aggressively, there will be pushback. While the renewal rates are currently sitting at 90% or more, that, while it's a strength, also is the biggest risk factor for the moat eroding. And with the bar set so high, it is easy to slip up. So now we want to look at what is stopping Costco from doubling in size today. Now you would think for a grocery warehouse store, the primary constraint would be physical or capacity, right? How many of these stores can we create? They've got over 900 stores internationally. And while it is a challenge to find new locations to set up without cannibalizing existing ones, this isn't the primary constraint. The bigger constraint is actually the culture and the membership perception. And it's closely linked to the moat dying. Management doesn't have many levers to pull here. It's got that membership fee. And if it hits that too aggressively to grow margins and profits, it will backfire. So to double in size today, it needs to just do three things. It needs to keep finding good locations that don't cannibalize the existing ones. It needs to scale internationally and execute that well. And it needs to maintain that membership loyalty and essentially ask for more money over time. That is a tougher game to play than just open more stores over time. Let's talk about us, the investors, the individuals who are looking to own this company. There is one dangerous sentence I hear around Costco, and it is echoed by many voices online, and that is, you basically can't overpay for Costco, it's always a buy. I'm here to say that's a lie. And so in the realm of behavioral biases, we are dealing with a narrative fallacy. Okay, the story here is that Costco is a great business, great culture, loved by Charlie Munger. It's never blown up before. And investors take that story and use it to justify any price. But here's the math. Revenue growth is high single digits to low double digits. Margins are stable but thin, and the footprint is already massive. So how do we mitigate this bias when looking at Costco as a potential investment? Well, we need to analyze it from zero, ignore the brand, and build our view from the latest numbers. We need to pre-commit to a kill switch based on the business itself, not on the share price. And I'll share mine in a minute. So where does that leave us with Costco? Currently, the verdict I have is a watch. It's not avoid at all costs, and it's also not buy at any price. It's a watch. And why is it a watch? The business model is fantastic, okay? The membership fees on top of a low margin retail is incredible. The moat, the costs, the habit, the trust is real and intact. But the main constraint is membership trust and expansion complexity. So given this is a watch, we need to establish two things. One is our kill switch. What makes this an avoid? And two, what is the risk on? When would we want to own this stock? From a kill switch perspective, it's very simple. We want to look at the renewal rates as an indicator of management performance. That's going to give us a sense check as to how management are handling price of membership fees and if there's any impact of the two-tier membership offering on customer loyalty. If we start to see those renewal rates meaningfully drift away from 90%, that is our kill switch. That is a clear signal that the moat is eroding and it is no longer the Costco we know. But what would make us want to own this? We need to see steady growth in membership and international expansion outside of the US and Canada. But the thing that defined our kill switch is also going to really drive our risk on, and that is solid performance on the renewal rates. If they can't scale the business without abusing membership trust, this limiting factor will prevent the company from being able to deliver to its owners. And finally, let's talk about the price. Okay, this company is trading like a tech giant. Okay, at a 50 price to earnings ratio, what do you even say to that? This is a warehouse grocery store. So let's see, where is the market right? One, they are pricing this as a brilliant business, and they're right to do so. It really is a fantastic model. The cash engine is resilient and durable and has evidenced this. It has the track record. And finally, it is one of the better run large cap retailers of the world. But where is the market out of alignment? Where are they overweighting or underweighting? Well, firstly, as we've demonstrated in this video, The culture and trust is the single strongest aspect of Costco's moat. And currently the market is treating that membership trust and that risk around the culture as if they're basically zero probability. It's also priced as though the business can continue to scale without hitting any friction. We know that finding new locations that don't cannibalize existing ones is a challenge, and we know that growing internationally is also a challenge. And because of the voices online around this company and because of its historic performance, many of those voices are saying, well, this is a company you can pay any price for. But what I want you to take away from this episode is to reflect on what you would want to see in terms of your risk on and risk off triggers. And if this episode helped you see Costco differently, like an owner rather than a trader, I'd appreciate a like and subscribe, and send it to somebody who thinks that Costco is a buy at any price. And if you've made it this far, I genuinely want to say thank you for watching, and I'll see you in the next episode of Company First, Price Last.